Hey everyone. To start off this week, I want to take a moment to invite everyone to Marcus and Millichap's upcoming 2025 Economic and Commercial Real Estate Outlook webcast featuring our CEO Hussam Naji and Moody's Chief Economist Mark Zandi. Mark has joined us for our Outlook webcast for the last 2 years, and his predictions have proven to be exceptional. So add it to your calendar and register for the webcast on marcusmillichap.com. Now, speaking of forecasts, the Marcus and Millichap research team has wrapped up our employment predictions for the coming year. At a macro level, we expect the pace of job creation to step back a little bit compared to 2024, adding 1.8 million jobs, which is 1.1% employment growth. This downshift is driven by a variety of factors, but one of the keys is the still elevated interest rate climate that could slow business expansion. Although the Fed started reducing rates last September, current expectations call for just 2 additional rate cuts in 2025, which would take the overnight rate down to 3.75%. Now, just 3 months ago, many expected the overnight rate would be reduced to the low 3% range by the end of 2025. So expectations have shifted significantly since October. Basically, the Fed is being very cautious about inflation risk. In December, Chairman Powell said, "We're at or near a point at which it will be appropriate to slow the pace of further adjustments." The slower pace of cuts next year, meaning 2025, really reflects both the higher inflation readings we've had this year, meaning 2024, and the expectation inflation will be higher. In addition to the Fed policy, we've seen a disconnect between the overnight rate and long-term interest rates. So the 10-year Treasury has bumped up to the 4.7% range. Now, that may be temporary. I think there's increased uncertainty about what policies will come into play in 2025 and how they'll impact the economy. As a result, the 10-year has been trading at its highest rate since April of last year. Now, once there's more clarity about the policies of the incoming Trump administration, the 10-year could come back a bit. But because interest rates are elevated and probably won't go down as much as many people had hoped, the pace of job creation may be a bit slower in 2025 than it was in 2024. But not all markets are affected in the same way. Based on our forecast, the 5 markets adding the most jobs in 2025 will be Dallas-Fort Worth, Houston, New York, Washington, D.C., and Atlanta. Now, that's not a huge surprise. Those are 5 of the largest employment markets in the country, so it makes sense for them to add the most jobs. But what I find more interesting from a commercial real estate investment standpoint are the markets with the biggest percentage increase in employment. So coming in at number 5 in the Marcus and Millichap 2025 employment forecast is Houston, Texas, with 2% employment growth and the addition of 68,000 jobs. Houston added Chevron to its lineup of Fortune 500 companies headquartered in the metro, taking the total to 24. In addition, the Port of Houston and Texas Medical Center continue to grow. And number 4 is Austin, Texas. Austin has been one of the top employment growth markets for several years now, and as a result, Austin has been a magnet for developers. So even though there's been fantastic employment growth, there's also been outsized commercial real estate development, which has kept commercial real estate supply and demand roughly in balance. Number 3 on the employment growth list is Fort Lauderdale, Florida. Southeast Florida has been growing at an exceptionally rapid pace for several years now, with a lot of companies opening offices there to capitalize on the strong labor force. In addition, Disney is expanding its cruise line presence in the market, and the Broward County Convention Center is expanding, which should support continued growth in the tourism sector. Coming in at number 2 is Jacksonville, Florida. Jacksonville is one of the smaller metros with just 810,000 jobs, but we're predicting 2.2% employment growth in 2025, about double the national pace of job creation. Boeing and DHL are expanding their footprints in the metro, combining with the local port and the naval station to anchor the labor market. And the fastest growing employment market for 2025 on our list is Raleigh-Durham-Chapel Hill, where we're forecasting 2.6% employment growth. The highly educated populace in this area, where about 45% of the population have a bachelor's degree, continues to draw businesses, including Apple, which is currently building a new campus in the area. Now, for this video, I focused on some of the fastest growing employment markets. In just 2 weeks, on January 27th, Marcus & Millichap will release the 2025 Multifamily Investment Forecast. And in there, you'll be able to get the data and insights on 50 major commercial real estate investment markets. You'll be able to access the report on our website, marcusmillichap.com. That report and the upcoming webcast featuring Hassam Naji and Mark Zandi will help investors keep their eyes on the horizon.